Hey everyone, I'm Scott Cunningham, aka Scottsy Business, and today we're going to be going through another amateur investing update report where I cover all of my dividend earnings, all of my passive income from stocks. I also look at my growth investments in stocks and all the individual stocks that I'm actually investing in, all my buys, all my sells, all of my trades. And then we're also going to look at all of my passive income being earned from crypto, mainly from staking, as well as how my crypto portfolio has performed over the past month. We're going to be diving into all that awesome stuff in just a moment after a quick word from my sponsor.
A big thank you and shout out to my sponsor Cake Wallet, which is an open source, non-custodial Bitcoin and Monero wallet that also has a built-in exchange. It's available on iOS and Android.
Thanks again to my sponsor. Now let's jump in. So, as always, we start off with our dividends, and I finally surpassed $1,000 of dividends earned. Now up to $1,054.99. Pretty awesome milestone to finally get past here. And as you can see, last month I earned $94.68, which is very, very good. A little bit down, but it's in line with how this chart usually goes, where I kind of have a dip every few months, just based on when stocks are actually paying out. So over the long term, this has always been trending up and looking very, very good. So I'm excited. I think I'm in line with my goal. I wanted to get at least, I think my goal was 125 originally, but then I upped it to 150. I think I can get over $150 of dividends before the year is done. So that is what I'm aiming for. Yeah, we'll see. We'll see how it goes. I'll dive into all the individual stock buys and everything that have shifted around in a little bit. But in terms of crypto income, as you guys know, I really pulled back. But now I'm ever so slightly starting to shift gears again and get back into passive crypto income. So not much of a change this month, but I'm starting to do my D-lease delegations on Hive to earn more passive income on Hive. I'm starting to save more of my Hive back dollars and get that 10% APY on my savings. I've put a ton of Tron in a Tron wallet, and I'm now staking that again. So next month you should see a massive uptick on my crypto income. But for now, not a huge change, only just slight adjustments. So stay tuned. In the next update, there will be a very big uptick. And this is kind of just me getting ready for the big switch, where I think we're going to see some crazy stuff in September, maybe early October. And then it's going to be very bearish. And I'm going to just be focused on my crypto income for the next little while, probably 3 years or so. But we'll see how this all plays out. It's really contingent on if we have a crazy big run up near the end of alt season. So a lot of my investing is kind of contingent on how that plays out, at least for my crypto. And then for other passive income, I got like 84 cents from SoCan, which is just like the Canadian music kind of thing to make sure you get paid for any copyright stuff or if anyone's using your music. So 84 cents, it is what it is. It's not important. I just figured I would make sure to have that included. But I mean, my other income section has earned me $377 in total. That's not crazy, but hey, money is money. And it's not like I'm actually working on this. This is purely passive. So royalties are not huge unless you're very, very popular, but royalties of any kind are a great form of income. And if you've got the knack for it, if you can write, if you can produce poetry, anything that you can put out to the world and then you don't have to work on it anymore, you'll earn passive income from royalties for a very, very long time. And, you know, it's lucrative. So it's, yeah, I suggest it. If you know, that's in your wheelhouse of creativity or works within whatever you're trying to do. In terms of my main crypto portfolio, I am very blessed. At the beginning of August, when I recorded this, I saw a 51% increase from the previous month, which is just insane. But that's exactly what I kind of expected after that crazy drop. People thought that we were going into a very bearish time. I was more of the mind that this was a little hiccup on our current cycle. And this seems to be correct, but we're really going to have to just see what happens next month. Since recording this, I think today I'm like $1,000 above this. So we've been up and down throughout the month, but there clearly hasn't been a massive drastic shift from the beginning of the month when I recorded this. But again, amazing increase. And it's nice to see this kind of lining up with everything that I've been saying. This was my expectation all along. You can see it in all my previous videos. And yeah, it seems like we're tracking along for basically exactly what I've been expecting. And that's amazing to see. So just fingers crossed that we keep along the same path. And yeah, I'll keep tracking along. So for my stock investments, another really good month as well. I'm up 9% at the beginning of August. And I'm actually above that now because I invested a little bit more as well. And I shifted some things around. But stocks have been doing very well for me. So that is fantastic. Really good to see. And this is not correctly updated. There you go. All right, now that's correct. But yeah, so this is, a decent amount up, and I didn't put in $3,000, so a good amount of appreciation. And yeah, stocks just seem to be doing a lot better right now. It's funny because whenever I see news about the stock market, normally it's bad news and it's talking about tech stocks or, some of the hype stuff that's going on. For me, most of the time when I look at my stock portfolio, it's going up because I've invested in very safe quality industries that have extremely low PE ratios, which is why I know that they're going to be extremely safe. Banks, insurance, really quality REITs, and then just some general ETFs, plus a little bit of utilities because everyone needs utilities. Essentially, I've talked about this before, but my whole portfolio is just based around things that people need no matter what the economy is going through. So it's simple enough. In terms of my budget, I'm still kind of doing poorly with my budget right now. But again, I included a ton of different things that I was upgrading over a few of these months. So the budget is kind of way out of whack from what it normally is. I'm going to be definitely correcting for this and being extremely frugal. But part of this might just be the way that I've been tracking it. I'm still very much on track to spend $36,000 or less. Currently, my estimation, if I was to be exact, is like $35,780. I don't expect to be exact, but that's currently what I've got set up for my budget. A lot of the stuff I'm probably not going to fully use. I just would rather have more than not enough, more allocated than not enough allocated. So that's kind of how I do my budget. The reason I'm showing you guys my budget is really just to kind of keep me accountable, but also show you the other side of things. I try to keep things pretty, on the same track, not crazy spending one month and not crazy spending the other month. A lot of it is very in line with what I'm trying to do. And yeah, it's working out pretty well. So, no complaints on my end. And this is just to show you that if you stick to your budget, you're going to get the results that you're looking for. And also, again, just to prove that I am saving 63% of my budget right now, not 65%, sadly, which is what I'm aiming for. But right now I'm at 63%. I either need to make more money or I need to pull back my spending to get myself back up to 65. And I intend to just make more money. So this shouldn't really be a big issue, but it is something that I'm always mindful of and working, with my budget and making sure everything is good. So Going over to my total portfolio breakdown here. $269,853.19. So that's obviously way up from the last time we checked in, but most of that is just my crypto spiking back up to what it used to be. So it's good to see that everything's kind of coming back into focus and just more or less correcting from the crazy semi-crash, I guess you would say, that we had. And yeah, I mean, not a lot has changed with my portfolio. As you can see, the breakdown here, still very heavily weighted on Ethereum, just out of circumstance because Ethereum's been doing so well. I originally weighted it with BTC, more highly weighted. But yeah, Bitcoin has been doing all right, but Ethereum has just been like crushing it. So Ethereum's been really, really good, even though the gas fees haven't really come down, which they weren't really supposed to with the last upgrade. That was kind of a misconception with the upgrade. It did significantly improve the value of the chain and set us up for a possible deflationary Ethereum, which would be, amazing. Especially in terms of like its store of value. It would almost make it better than Bitcoin in a sense, because, obviously transactions could go down and then you would not have that deflationary aspect anymore. But, needless to say, I'm going to be doing a full episode covering Ethereum 2.0 and all the stuff that's going to happen because it's still so ambiguous and people are still very confused as to what actually changed recently and all the stuff that's going on there. In terms of passive income, as I said, I've been focusing a little bit more on this stuff now and just building my portfolio up again. I invested about $650 into Tron, so I'm going to start. Well, I have been staking that and voting for super representatives, so I'm getting my earnings there. I've already earned like 9 or 10 Tron since I started, like earlier this week or last week, and yeah, Tron is great. It's very easy. I did this before. If you look way back into some of my older videos, I was staking Tron, and Tron's always been like really easy to work with, really, really easy to use. Hive is obviously a much better way to earn more, but the beauty of Tron is the liquidity that after 3 days of having it staked and frozen, you can just take it out at any time, any amount, the whole thing if you want. That ease and like that liquidity and being able to so easily take it out and use it, that is extremely valuable to me. And the 13-week alternative for Hive is much less attractive, but you're earning a lot more APY. So, to each their own. It depends what you want to do, if you have long-term faith in them or not, etc., etc. I still think they're both great projects. Hive is infinitely better for what it's actually achieving. Tron is just more ideal, I guess I would say, for just that liquidity aspect. But, to each their own. The good thing about Hive, too, is that you're just going to get the money and you can turn on auto claim. Whereas with Tron, I have to actually go in and claim it and then freeze it and then vote with it if I want that compounding interest. Whereas with Hive, you're not necessarily going to get compounding interest with your delegations if you're doing what I do, where I lease my Hive power to de-lease, and then I get way higher APY on it. But the Hive that I'm earning that is going directly into Hive power is going to, compound in that sense that every time it goes in, it'll be earning more as well. But any just Hive that I get normally won't be compounding. So you do kind of have to have that involvement where you are taking it, powering it up, or putting your HBD into your savings to actually get that percent increase. And I think you do have to claim now for the HBD as well. So they do kind of make you somewhat actively involved to get your passive income, but very, very light. It's more so just that claim aspect, which I believe is a taxable event, and that's why they have to have you claim it. That's my understanding anyways. In terms of my stock sector breakdown, I've pulled a little bit out of banking as I've seen dividends start to massively pull back, I would say. So I pulled a little bit out of banking, just like mainly in, well, I'll get into my individual stock buys and stuff. Right now, I'll just talk a little bit more high level. And I pulled a little bit out of real estate. No, I put more into real estate. I put more into my ETFs. The main thing that I pulled out of was just banking, but it was just a little bit, and we'll get into all that individually. And then I've still got my same growth stocks, my Bitcoin and Ethereum ETF. Now let's actually look at the individual buys, because I know this is what you guys really want to know about. So you can try to copy my portfolio, but don't, obviously, because you never copy someone's portfolio directly, because they're doing things, I'm doing things based on timing, based on what works for my portfolio. You don't just copy someone's portfolio because they've set it up specific to what they're trying to do, and it's based on their timing and everything that they've done. You can't just copy it directly. So the bank that I sold out of was National Bank of Canada, mainly because its dividend dropped below 3%, and I don't hold any dividend stocks that are below 3%. So naturally, I sold out of those. Same issue with these two ETFs. Not that they were below 3%, but they were very close to 3%. And most of my ETFs are much higher yielding than that. So I decided to pull out of those. I think that was a right choice. And I just invested more into some of my other dividends that produced higher yields. So all of these dividend ETFs are really, really solid. So there wasn't an issue to switch around. It wasn't like, oh, like I'm giving up something here to get something there. They're all really, really great picks, and I've done a lot of research on all of them. But when I see one massively pull back their dividend and the others stay the same or increase, naturally, I'm more likely to switch some of my prioritization or, balance my portfolio a little bit more so that I'm more heavily weighted on the more quality ETFs that are giving me the dividends that I'm actually looking for. Because again, we're aiming for a 5% average yield, and right now I'm only at 4.83. So yeah, I could have pulled out more from these banks because of their low dividends. But at the end of the day, you kind of have to come to terms with the fact that banks being probably one of the safest stocks ever, at least in Canada. No bank has ever really gone fully bankrupt and not been saved by the government. They're just so safe, and to accept a little bit lower of a dividend for that security is not a huge deal. And it makes sense to have some stocks that are more safe and some stocks that are a little more risky to kind of diversify a little bit. Not that you want to purposely take on more risk, but the higher yielding, potentially more risky stocks like real estate is definitely riskier than banking, but it's also going to pay me out a much better yield. So naturally, you kind of have to contend with that. And as such, I've split up my portfolio pretty reasonably, I would say. This is one of the most conservative portfolios, and it's done really, really well for what I need it to do. Sadly, I'll admit that the trading costs on trading through my bank are so ridiculous that I've almost spent the same amount in trading costs that I've earned in dividends, which is kind of ridiculous. But I'm still up $4,785. Okay. And I mean, if you include the dividends, it's 1,000. It's another 1,055, but I spent 1,000 in trading, so it's only up like another $55 on top of that. But that's still almost 14% realized gain just from holding my stocks in appreciation. Now, I'm not going to be trading nearly as much as I continue to build up my portfolio. The reason I did trade so much was because I really was learning, and I would go into a stock and then realize that it really wasn't a good idea and have to, switch things around. And Through that whole process, I've learned a great deal, and clearly, as you can see, I've paid the price, at least in trading fees. I've gotten this portfolio on my bank as high as I would like to get it. Now, I would say 90% of the investing that I'm going to be doing in stocks is going to be on another exchange so that I can continue to diversify my holdings. Most people wouldn't really care about that or think that's an issue, but I've seen too many instances of bank accounts being shut down and things similar to that I would rather have my money spread out into several different venues, not so much so that it makes it a struggle to access my money or to make big moves, but enough that if I have, a failure in one spot or two spots, that I still have some sort of backup or something that I can rely on outside of that. And I do that across everything I do, right? Whether it's me posting on 50 social media platforms or investing on 3 stock exchanges instead of just using one, I'm always going to spread myself out and lessen the impact that I would have if there was some sort of issue with any one of those accounts, essentially. And some people might think that's that's a bit much, but it doesn't really negatively impact you to do this. Aside from your dividends will kind of appear in each account separately rather than all in one place, so you can just spend it. That makes sense because then you'll end up spending more on trading costs, but you can just wait a little bit more. You can actually sign up for drip investments where you actually contact the company themselves and set them up so that all of your dividends go back into buying more dividends automatically and they don't even show up in your account. So you can do that. And that is a great way to get fractional dividend stocks here in Canada. But it's a huge pain in the ass. You have to call all the companies individually. And when you want to cancel, you have to call them all individually. So it's a lot of work. If you're investing in a very small handful of companies, it might make a lot of sense to do this. But, it's something to consider. Anyways, let's move on. I haven't done any changes here, but this has massively come back up. I was down like 40% or something last time we checked in. But as you've obviously noticed, Bitcoin is going way back up. So I expect this in the next month or so to be in the green, and then no more crypto or tech or any kind of growth investing for me. I'm done with growth investing after this, just because I've done so well with dividend investing and so poorly with growth investing that it's just not for me, and it just stresses me out. My dividend stocks are always performing well, always making me happy. And then I look at my growth stocks and they always just stress me out. Even when I was making a lot of money, like with Tesla before their index fund ad and all that kind of stuff. It's just, it's unnecessary stress I don't want to deal with. And you do always have to consider the stress caused from your investing, because if you can't sleep at night, but you're making an extra, few bucks, it's not worth it. So I would recommend investing with what you're actually comfortable with and what you can actually sleep at night, knowing that you have that invested, because I can only imagine how people feel who are, 100% in Doge or, 100% in this, and they see the price change and it's like, it could be life or death situations for these people, like truly. So I do not recommend that at all. Plus we've seen way too many situations where people have completely lost everything to still be making these mistakes. By the way, the next video I'm doing is a video on common mistakes that people make. I'm going to go through all these user submitted ones and then what I see the most and things that I've experienced, and just covering all these different instances where people make mistakes when they're getting started with crypto. So stay tuned for that. In terms of my growth crypto, as I mentioned, not a lot has changed. I continue to accumulate my library credits. Most of this is pretty much the same as before. It's just notably gone up in value because the price has gone way up, and that's fantastic. The big change is more so just with me starting to focus more on this and getting into my Tron again. So this is all great. Not a lot has changed otherwise. Very mediocre earnings, but I expect that to start to go way, way up. So stay tuned for that. That's pretty much everything for today, you guys. So I'd love to hear, how are you making money? What are you investing in? What ways are you earning passive income from stocks, from crypto? I'm always super interested to hear what you guys are doing. And let me know all that good stuff in the comments below. If you stay tuned and watch to the very end, then I would highly appreciate it if you could comment and let me know by commenting #1ham, hashtag #1ham in the comments below. And that way I know you watched to the very, very end. Again, thank you so much for watching. I'm Scott Cunningham, aka Scottsy Business, signing off. Cheers.